Hello traders, how are you? Vladimir here from Home Trader Club. Welcome to the weekly Forex forecast. In today's video I want to share with you three very interesting opportunities the way I found them. That would be the pound dollar, the gold and the pound Canadian. The week started very slow. The last week started very slow, and then right after Wednesday and Thursday, where we had the Federal Reserve meeting and then the CPI data showing that the inflation is still here and still high, 3.7%. It's holding it's holding tight despite all the efforts and the hard work the Federal Reserve puts into this war. Of course, with all the situation in the Middle East and the war in Israel, the recent prices on gold and oil also soaring, so the market is very sensitive. The volatility is high, and that's where we should be prepared, because usually when the volatility is high and the setups are synchronized among the different time frames, that's where the opportunities lined up. So in this video I want to share three trades, as I said before. That would be the pound dollar, gold, pound Canadian. Ready? Let's begin. But before we continue, big thanks and thumbs up to 8Cup Broker for supporting me, my work, my channel and my community. And also I am super excited to announce a very special program. For the first time ever, to be honest, I am doing with any broker, and that's an amazing opportunity to me. And again, thanks for 8Cup for making that happen, with private mentoring for my community. So follow the instructions below this video in the descriptions, and let's make it happen. So now let's talk about the charts. So the first instrument I want to talk about would be actually the pound dollar. Starting from the very higher time frame, the pound dollar is right now under a bearish correction. And actually, let's take a look on the numbers we see here. First of all, take a look how red this screen is. This is the market trend snapshot. That's the percentage change in real-time data we have in Home Trader Club. Take a look on the pound dollar, how all the numbers are synchronized in a bearish direction, especially 1 month. With these numbers in mind, the idea here is sell, sell, sell until key levels would be reached, and then trend will change. So with the numbers, take a look what happens here on the pound. We have had a beautiful ride on the upper Bollinger Band for over than 20 candles. The price then rejected a strong support that became a resistance. And then we got the move down all the way to the opposite Bollinger Band. And it never stopped since then. So the question is down to where will the pound will be able to actually drop. So I do see this level here as a key zone where the pound is probably heading, and where it's very likely will stop. The reason being is that this was the last important low of the buyers before the trend flipped and started making higher highs. Then retested this area, and twice, 2 weeks in a row, it managed to create more spikes. So this is significant zone from my point of view. Going down to the daily chart, we can see that the pair has clean structure of lower highs, lower lows. At the moment, it doesn't seem like it's over, as one final low next to these levels we were talking before, right? And then until the bullish divergence would go and be completed. So I do expect one more low on the pound dollar, and I do expect then a bullish divergence to form, market to make lower lows on the chart, indicator to make higher lows. It could be the moving average of the MACD with the RSI, and from there possibly to look for the buys. Until then, my view here is yet bearish. One more important thing to pay attention to, take a look here on this bearish channel on the pound dollar. Quick, very clean sequence of lower highs and lower lows. And take a look on this volume profile based cloud zone here. Okay, it was a support, now a resistance here on a daily chart, but also take a look on all these cloud as a strong volume profile balance zone. A lot of sellers are there, so my anticipation is for further bearish continuation. Keep in mind what we discussed before. The recent CPI data, which came in a big favor of the dollar, which shows that the dollar is yet here and is yet strong, and with everything that happened in the Middle East, all that contributes to the current negative environment. Now, what I like on the pound dollar on the 4-hour chart is that we did have a bullish divergence. So the correction here, and you can follow that, I was talking about it on one of my recent weekly forecasts. The anticipation here was on the short term that we should see the rally, but this rally should be blocked inside this zone, and it was. And what I like the most here is while the market was trying to make these higher highs, the indicator was not. And that's a very strong indication that possibly that it was a fake rally. So what happens then is this most recent sort of a pullback breaks down. Right now we can see clean 3 lower highs, lower lows being formed. So any pullback here is a good opportunity to go and look for sells. Could the pound dollar make something like that before the next big rally? The answer is yes, but before the next drop, not rally. But it's very rare. Most likely it will go and hold these broken zones, and any pullback from there is a good opportunity to look for the sells, expecting one more new low. That's my view on the pound dollar. Share with us your view. What would be the low you expect a pound dollar to reach? Share with us in the comment section below this video. Next one is gold. You remember, short time ago, we were talking about this key level. This level, as you can see, there is no need to present it differently. This level was respected brutally. We got a major rally. Now it's very important to mention this level that we discussed, I don't remember when exactly, recently. My next level here was that we should reach the resistances that are the supports that were broken, now resistances, and then these levels. Now it's very important to mention here, these moves are not technical. This is direct money flow of the market to something more stable or more reliable in periods of lack of stability. The war in the Middle East, the war in Israel, is affecting not because of this conflict, endless conflict, but because of the fear the market has. How could that affect the Saudi Arabia and Lebanon and the US, which sent their warship, and Britain, which announced that will send their forces there as well to the Middle East? All that brings lots of fear to the market and to the investors. And as long as these conditions did not change, the view here on gold is that the rallies could go and continue. Okay, and again, it's not technical, but it's very fundamental, and it connects to what I was presenting several months ago. For those of you who follow my channel, you should know that, with the anticipation to get one final high here on the monthly chart. And there is a very good chance that with the most recent events, it will actually go and happen. So here is what does happen on gold. And again, as long as the situation stands as is, this is a key bottom here. And with breaking this falling sort of corrective structure here, and if we can get these higher highs in play, right, we should be looking to buy the pullbacks with a very high probability, first of all, in the instant view, to reach these supply areas, the previous swing highs, then to get some pullback and further continuation to all-time high. As long as the current disgusting, I don't know what's the right word to say, the terrifying, sad, painful war happens at the moment, as long as that is happening, and maybe it's in some way also important to mention that this has more impact on the short term than what brings the war between Russia and Ukraine. Okay? Both wars are absolutely sad, and yet one is ongoing for such a long period, one is here, which brings new players under instant danger, and that what brings new fresh fear to the market. And with that in mind, again, it's important to understand that this is not only technical game here, a lot of fear involved here, and as long as this pressure remains, that could be the fuel the gold was looking for to go and create new highs, as a symbol of stability and lack of stability. So this is the gold, and with that in mind, it's important to say that if you choose to get involved in such instrument during such period, do it smart, do it clever, with clean, good, proper risk management. Remember, you have to make numbers work in your favor. And remember that it's not all about charts. Risk management, money management is important. So pound Canadian, a pair that we covered in one of the weekly forecasts from a recent period, we were after sells from this zone, anticipating to see some corrective structure. We get the corrective structure in play, we get the first wave, we get the lower lows on the market, we get a pullback. With that in mind, sell the rallies is the plan. So here is what we have on the analysis. Falling resistance line on the weekly chart, classical moves here with these three waves, brings a bearish divergence, higher highs on the market versus lower highs on the histogram, then between the most recent two highs, higher highs on the chart and lower highs on the moving average of the MACD, and then the flip, making lower lows on the chart, lower lows on the indicator, called a convergence condition, making it from negative to positive to lower negative. Classical technical conditions, which brings the sell the rallies in play. Also, take a look what level was respected. It's 170, and again, take a look on this volume profile zone. Absolutely major strong zone. Going down to the daily chart, this is where it became interesting after the double top was created and bearish divergence was in play. moving average of the MACD, RSI. We got finally lower lows on the chart, lower lows on the indicator. After the price reached the oversold conditions, we got the bounce. And then with this bounce, take a look what does happen. Again, volume profile, you can see this major volume profile zone. We have falling resistance line. We have bearish hidden divergence, lower highs on the chart versus higher highs on the histogram, flipping from positive to negative to higher positive, and that is a hint for further bearish continuation. So as long as this key zone managed to hold, the price could go and try to do something like that. It's absolutely fine, but it's pretty rare. So usually what happens in such cases, let's go to the 4-hour chart, take a look at what we have here with this double top in mind again, right? So usually what does happen in such cases is the market does that, creates some 3 waves, then going back to this zone and making that drop, the final drop. Okay, so that would be my plan here on the pound CAD, sell these rallies with the target zones. Well, first of all, of course, the previous low, but the main 2 lows in mind are these 2 lows. Okay? I expect to see this zone eventually completing itself here until the market will go and make the bullish divergence. So for me, pound CAD is sell. Simple. Let me know, what do you think about this pair, down to where this one can go, or up to where will it go if you are bullish. And I would like to thank you for your time watching this video. As always, I hope you find value in this video. Feel free to share this video with anyone who you believe can benefit watching that. If you found value, please hit this like button. If you are new to this channel, please subscribe to the channel with the subscribe button below this video. And I invite you to join our trading family, the Home Trader Club, where you will get your access to our full comprehensive courses for beginners, for advanced, VIP price action course, real-time trading opportunities, access to the community, and so much more. Join our family with the link below this video in the description. Once again, thanks for your time. Best to you and yours. Peace on earth. And I'll see you soon with more. I wish you good trading. Bye for now.